Imagine this. The world's most valuable company, a titan of artificial intelligence, loses $340 billion in just a few days. Nvidia, the same stock that skyrocketed with the AI revolution, is suddenly on shaky ground. What happened? Why did the market turn against a company everyone thought was unstoppable? And most importantly, should investors be worried? Or is this just a short-term storm before the next big wave? Stay tuned till the end, because today, we're breaking down the real story behind Nvidia's shocking stock crash, what technical signals are flashing red, and what it could mean for the future of AI and global markets. On September 2nd, Nvidia's stock fell nearly 4% in a single day, dropping to $167.22. This marked its fourth consecutive losing session, and more importantly, the first time since May that Nvidia closed below its 50-day moving average, a key technical indicator investors use to judge short-term momentum. The fall erased $340 billion in market value. That's more than the total GDP of countries like South Africa or Finland, gone in less than a week. Market experts saw this as a warning sign. According to Buff Dormeyer, chief technical analyst at Kingsview Partners, breaking under the 50-day moving average shows that momentum has broken down. He even pointed out potential support levels at $160 and $145, warning that if Nvidia falls below $145, the situation could get very serious. So, why did investors suddenly start selling Nvidia? There are three main reasons. 1. Geopolitical concerns. Ongoing tensions between the U.S. and China have investors nervous about chip exports, supply chains, and restrictions on advanced AI hardware. 2. Lofty valuations. Nvidia became the largest company in the world, surpassing Microsoft and Apple. With a market cap of over $4.1 trillion, many started asking, is it overpriced? 3. Slowing growth signals. Last week, Nvidia gave a tepid revenue forecast, signaling that the two-year AI boom may be cooling. After explosive demand for GPUs to power ChatGPT and other AI models, growth now seems to be decelerating. Put together, these factors created the perfect storm for a sell-off. Let's talk about the technical picture. The 50-day moving average, a short-term momentum line, was broken. This often signals weakness and can trigger algorithmic selling. Next key levels, $160 as near-term support and $145 as a major floor. Why $145? Because this level marked the breakout point in June when Nvidia last surged upward. If Nvidia bounces from $160, bulls may regain control. But if it breaks below $145, we could see a deeper correction, possibly dragging the entire AI sector down. This is why technical traders are watching Nvidia like hawks right now. Here's the paradox. Despite the recent drop, Nvidia's stock is still up nearly 78% from its April lows. That's an incredible rally for such a massive company. Nvidia's rise has been fueled by the AI revolution. Every major tech company, Google, Microsoft, Meta, Amazon, relies on Nvidia's GPUs to build AI models. This created unprecedented demand, pushing Nvidia to become the world's first $4 trillion company. But here's the catch. Markets move in cycles. After a boom, there's always consolidation. Nvidia's growth is slowing, not collapsing, but stabilizing. The company is still profitable, dominant, and innovative. So while the short-term technical picture looks shaky, the long-term AI story is still intact. Analysts remain cautiously optimistic. The average price target on Wall Street suggests Nvidia could rise another 25% from current levels. Buff Dormeyer believes the stock has peaked in the short to intermediate term, but agrees there's still long-term opportunity. In simple terms, short-term, volatility, corrections, and possible dips. Medium term, caution, watch technical levels closely. Long term, the AI revolution is still just beginning, and Nvidia is at the center of it. Here's the biggest takeaway for investors. 1. Don't chase hype blindly. Even the strongest companies can face corrections. 2. Watch technical levels. Indicators like the 50-day moving average often warn before bigger drops. 3. Think long-term. Short-term crashes can be opportunities if the fundamentals remain strong. Remember, Nvidia losing $340 billion sounds terrifying, but the company is still worth over $4 trillion. That's more than Microsoft, Apple, or Google. Corrections are part of the journey, not the end of it. So, is Nvidia's crash the beginning of the end, or just a pause before the next big rally? Only time will tell, but one thing is clear: AI is here to stay, and Nvidia remains at the heart of this technological revolution. What do you think? Is Nvidia a buy at these levels, or will the crash get worse? Let me know in the comments below. And if you found this breakdown helpful, don't forget to like, share, and subscribe for more deep dives into the biggest stories shaping our financial future.